What's going to happen when the government brings in its new taxes for property investors? Hi, I'm Ed McKnight, economist here at Opes Partners, and in today's video we're going to talk about the 5 unintended consequences of the government's recent tax changes. Now you might ask, well Ed, what is an unintended consequence? Well look, every action has some sort of intended effect, what you actually wanted to happen when you took that action. But often what also happens is an unintended consequence or an unintended effect, something you perhaps didn't expect to happen or certainly wasn't the main thing you wanted to happen, but it still happened because of your action. And there are 5 major unintended consequences that we see from the government's tax changes. The first of which is higher rents. Now, why might rents increase? Well, if you put higher taxes on landlords, what's the intended effect? To have fewer people go out and purchasing existing properties. Why? So that they're more available for owner-occupiers, first-home buyers. That's exactly what the government wants to happen. The unintended effect, or perhaps this one might be intended, is that existing property investors who own existing properties, will start to sell those. Now, what does that mean? Well, first of all, if you own a property, or I own a property that's 4 bedrooms, it's got a lovely family in it, that means that those people get booted out because they've had to sell this property, and unfortunately they've got to go look for another rental. And the truth is that not every single person, not every single tenant is able to afford to purchase the property they live in. They might not have the deposit, they might not have the income to service the mortgage, but they've got the ability to rent that property. Well, those tenants, they're potentially going to be booted out, unfortunately. Second thing is that there are going to be fewer rentals available for those sorts of tenants because people are selling their properties. And of course, that's going to turn into higher rents as well because there's just that lack of supply. And it's not just me saying it. In fact, the IRD said the exact same thing in the regulatory impact statement. They said that the IRD considers that additional taxes on rental housing, look, it's unlikely to be an effective way to boost overall housing affordability and will put upward pressure on those rents. The second unintended consequence? Well, you investors who have been here in the market for a long time where it's not your first rodeo, you're going to have less competition. You're the sorts of ones who have got some equity, who have got a bit of cash flow from your other rentals, who are able to withstand this. Now, what's that going to mean? Well, higher taxes on landlords. That's going to mean that fewer investors buy existing properties. So for you, if you're still in the market, still doing it, less competition for you. Going to be easy pickings, going to be able to pick up some bargains potentially. Now, what that means is that the people who are able to do this and still take action are those people who have been in the game for a while. So the people who have already built their wealth through property, they're going to be smooth sailing. You guys who are just starting out and who need to take on more debt because you haven't had that time to build up your equity, it's going to be harder for you. You're potentially going to have to look at new builds or some other form of investing because investing in existing properties may not make sense for you anymore. Unintended consequence number 3, there are going to be fewer larger family homes available to rent. Now, why might that be the case? Well, there are some massive tax incentives for new builds within these tax changes. And in fact, if you take a large old property and convert it into 2 different dwellings, then both are considered new builds, both get those massive tax incentives. So what's the effect of this? Well, if you've got tax incentives to convert old family dwellings into smaller dwellings, that's going to mean that that activity happens. It's going to mean that large dwellings are converted into multiple units. And the effect of that is that there are going to be fewer large family homes available for tenants to rent. Unintended consequence number 4, the price of new builds is likely to increase. Now, why might that be the case? Well, we've got existing properties that have high taxes levied on them, and then you've got new builds which have fewer taxes. They've got tax incentives to go and purchase these. Now, what's that going to mean? You're going to have less demand or less competition for existing properties, more competition for new builds. That's going to mean that there's less price pressure for existing properties, more price pressure for new builds. So why might the price of a new build increase? Well, it all comes down to building materials. So building materials like the demand for construction labour, the demand for developable land, and demand for things like bricks and timber, those kinds of things. That's what we call in economics a derived demand for the demand for new builds. Now, what do I mean by that? So if you have more demand for new builds, then you are going to have more demand for construction labour, more demand for developable land, and also more demand for building materials. So that's going to cause price pressure, because if you've got way more demand for new builds, way more demand comes for those inputs of new builds. So if the price of those increases because you've got limited supply, and on top of that you've got very high demand, that's going to push the price of new builds up. So price is going to increase. And that actually brings us to unintended consequence number 5, which is that first home buyers are going to be crowded out of some new builds. Now, what do I mean by that? Well, there are great incentives from the government for a first home buyer to go ahead and purchase a new build. Things like you've got a higher house price cap for the first home grant. Things like new builds are the only properties available for the first home partner scheme. And on top of that, you also get double the first home grant if you go and purchase a new build, which is great. But if the price of new builds increases because more investors are trying to go purchase them and more investors are pushing up the price of new builds because cost of building those properties is increasing, that's going to push more new builds outside of the first home grant range. It might push the price of a new build outside of what a first home buyer is able to afford. Now, that's going to mean that while the government's trying to help first home buyers to get into new builds, there may not be new builds available for them to purchase compared to what would otherwise be the case. And that's something I really picked up when reading what the Ministry of Housing and Urban Development said in their response in the regulatory impact statement. They said that reducing investor demand for property could have a significantly negative impact on supply and is likely to have a number of unintended consequences. And in fact, we've gone through 5. Now, you might say to me, Ed, with all of these unintended consequences, surely the government can't bring through these tax changes. Surely they're going to change their minds. They won't come in. Absolutely not. Labor has got a majority within the House. They've got the ability to bring this through with no other support from other political parties. And so these tax changes are coming in. But for you at home watching this, if you've already got a property investment portfolio, the key thing to note is because of these unintended consequences, you're not going to be the only one who's hit in the back pocket, because some of this is going to be paid for by the increased rent that you're going to naturally charge your tenants. And in fact, make sure you tune in as well for the next and the final video in this 6-part series, because next Wednesday at 10 a.m. we're going to release a video where we walk through the 5 things that you can do to respond to these tax changes with your portfolio, and we call those the 5 R's. So make sure you hit the subscribe button on our YouTube channel so you're able to see that. And if you'd like to learn more about property investment here in New Zealand, check out the Property Academy podcast, because every single day we release a brand new 10 to 15 minute-ish episode to teach you something new about property investment here in New Zealand. You can find that on Apple Podcasts, Spotify, or your favourite podcast listening app.